Stocks look to build on best week in a year. What to know this week? Another slew of corporate earnings reports awaits investors in the week ahead as the stock market will look to extend its recent rally. Disney, DIS, highlights the week of quarterly reports while Uber, Rivian, RIVN, Occidental Petroleum, Oxy, and Warner Bros. Discovery, WBD, also highlight the schedule. The calendar will be quiet on the economic front, with the first reading of November consumer sentiment from the University of Michigan slated for Friday, the most notable release. On Tuesday, Yahoo Finance will host its Invest conference, with voices including DoubleLine founder Jeffrey Gundlach, Meredith Whitney, and media leaders Jeff Zucker and Kevin Mayer among the scheduled speakers. Stocks enter the first full trading week of November after their best week in roughly a year, as increased investor confidence the Federal Reserve's rate hiking campaign may be over sent equities soaring into the weekend. The Dow Jones Industrial Average, (G), gained about 5% last week, while the S&P 500, (GSPC), added nearly 6%. The tech-heavy Nasdaq Composite, (IXIC), soared more than 6.6%, marking the best weekly performance the major indexes in 2023. Friday's jobs report showed job growth last month was cooler than expected, with the U.S. economy adding 150,000 jobs in October and the unemployment rate reaching its highest level since January 2022 at 3.9%. The labor market slowdown is a welcome sign for the Federal Reserve, which has noted more softening in the labor market will likely be needed to keep inflation on its downward trajectory. It is still likely to be true, not a certainty, but likely, that we will need to see some slower growth and some softening in labor market conditions to fully restore price stability, Fed Chair Jerome Powell said in a press conference last Wednesday. Powell didn't explicitly turn down the possibility of further rate hikes, noting Fed officials are not discussing rate cuts right now. Still, the market took Powell's comments to mean the central bank is likely done with interest rate hikes for the foreseeable future. As of Friday afternoon, markets were pricing in a roughly 95% chance the Fed doesn't raise rates at its next meeting, per the CME Fed Watch tool, up about 15 percentage points from the day prior. A month ago, markets had priced in just a 53% chance the Fed wouldn't hike again. The October jobs report seemed tailor-made to match Powell's soft landing message from earlier this week, J.P. Morgan chief U.S. economist Michael Feroli wrote in a research note on Friday. At the end of the day, the economic data are going to call the shots, and the data say we're done with rate hikes. Disney leads the earnings rush this coming week with the media giant set to report results after the bell on Wednesday. Investors will be focused on the company's new reporting structure, specifically any additional details on ESPN, which recently released individual financials for the first time. In February, Disney CEO Bob Iger restructured the company into three core business segments: Disney Entertainment, Sports, ESPN, and Experiences. Inside the report, key metrics will include Disney Plus subscribers and the success of pay increases on the platform. Investors will likely be on the lookout for any update on Hulu as well, following an announcement last week that Disney is buying Comcast's remaining stake in the streaming platform.